The Chinese economy is going to be probably at least twice as big as the US economy. Maybe 3 times, but at least twice. Since they have about 4 or 5 times the population, then it would only require getting to a GDP per capita of half the United States for their economy to be twice the size of ours. The foundation of war is economics.
China's rise to global superpower status seems inevitable. However, America is determined to contain China's growth to protect its position as the world's largest economy. There's a prevailing narrative that the US economy was weakened by job losses to China. For years, we've heard that Beijing has been outcompeting the United States. But can we blame China for American job losses when US companies voluntarily relocated for the comparative advantage China offered in labor and operating costs? The US is increasingly aggressive in its attempts to stifle China's ascent, pressuring its allies to follow suit. Yet, strategies such as trade wars, freedom of navigation operations, urging allies to abandon Huawei equipment, and opposing the Belt and Road Initiative have failed to yield results. In fact, one could argue that the more the US tries to suppress China, the stronger and more resilient China becomes. For example, accusations of China setting debt traps have only led to more nations joining the Belt and Road Initiative, BRI. By early 2024, over 140 countries were part of the BRI, encompassing nearly 75% of the world's population and more than half of the world's GDP. While Beijing builds diplomatic and economic ties with developing nations through the BRI, the US offers few comparable alternatives in infrastructure investment and financial aid. As more countries align with China, the US accuses China of various issues, including overcapacity and being an enabler in the Russia-Ukraine conflict. The more the US tries to halt China's rise, the more likely it is to fail, both economically and geopolitically. In this video, we will share core reasons why the US will struggle to contain China. Before we continue, please consider subscribing to our channel to show your support. First, China is the largest trading partner for many countries. According to the Wilson Center, an American think tank, China is the top trading partner for over 120 countries. China understands that to rise globally, it must prevent any country, like the United States, from hindering its progress. Therefore, it focuses on economic growth and building strong economic relations with other nations. During the Cold War, the US successfully contained the Soviet Union because the Soviet economy was crumbling, and the US persuaded neighboring nations to stop trading with the Soviets. Today, China's economy is thriving, and it is the largest trading partner for many countries. This means that when the US asks nations like Japan, South Korea, and its European allies to decouple from China, it often fails. For example, when the US requested Japan to stop selling advanced microchips to China to slow its technological advancement, Japan complied. However, this was the extent of Japan's actions. Consider Tesla's success in China. Over the past 5 years, China has fueled Tesla's explosive growth, making it the most valuable automaker in the world and a leading seller of electric vehicles. China is a crucial market for the automotive industry, especially for EVs, due to its vast consumer base and strong central financial system. As Tesla's second-largest market, selling high volumes of EVs in China is a significant part of its business strategy. Tesla is one of over 1 million international companies operating in China, most of which are strengthening their partnerships with Chinese counterparts rather than pulling out. Toyota, the world's largest automaker from Japan, is planning to build an EV plant for Lexus in Shanghai, hoping to wholly own the factory as Tesla did. As you can see, China is deeply intertwined in global trade, and any country that attempts to decouple and stop trading with China could face significant economic repercussions. Second, the rise of the Global South. The Global South refers to nations with relatively low levels of economic and industrial development, typically located south of more industrialized countries. In essence, it encompasses developing countries. China has been actively building political relations, strengthening economic bonds, deepening security cooperation, and fostering closer relationships with these developing nations. Contrary to a popular belief among Western policy analysts, there is no Chinese export surge to developed markets. These exports have stagnated for years. However, China's exports to the Global South have doubled. Some of China's export success in the developing world is driven by a new kind of triangular trade. This trade was motivated by the 25% tariff on $200 billion worth of Chinese imports imposed by the Trump administration in 2019. China ships components and capital goods to countries like Mexico, Vietnam, and India, which then assemble them into finished products for sale in the United States. This highlights one key fact. America is more dependent than ever on Chinese supply chains. Additionally, with the rise of the Global South, the world is becoming more multipolar rather than unipolar. The influence of the United States and Western countries like those in Europe will decrease, while that of developing nations such as those in ASEAN, Africa, South Asia, and Latin America will rise. China's role as an engine of global economic growth is creating positive, upward mobility for the Global South. The nation has made significant investments in these regions through the Belt and Road Initiative and various trade partnerships. This is why the US cannot contain China's rise. Perhaps the more crucial reason the US has been unable to recruit allies for its anti-China campaign is national interest. Joining the fight against evil communist China means sacrificing their own national interests. Most allied countries and developing nations are neighbors of China and rely heavily on it for their economic well-being. China will continue to grow. If you follow Western media, you often hear the narrative that China is in decline or crisis, and that America's restrictions on exporting advanced chips will frustrate China's technological ambitions. However, this is far from the truth. China has not only circumvented tech sanctions, but also worked around US tariffs. Domestically, China is performing relatively well. The country's GDP exceeded expectations, with a 5.2% growth rate in 2023. Meanwhile, the US saw a growth rate of just around 2.53%, and Germany, the financially strongest country in Europe, experienced only a 0.31% growth in GDP during the same year. In short, China is determined to grow stronger and wealthier regardless of US opposition. China possesses the economic, technological, and military capabilities to achieve this. Do you agree with our analysis? Share your thoughts in the comments below. If you enjoyed this video, please hit the like button and subscribe to our channel to show your support.